Okay, you find a potential winner. Now the money. Tip number 14, the financing guide, talks about the options.
Yeah, and understanding these is fundamental. It's not always just a standard mortgage for flippers. Often they use things like hard money loans.
Hard money loans.
Yeah, they're typically shorter-term loans, often with higher interest rates, but they're based more on the property's value, the hard asset, rather than just your personal credit score. It lets flippers move quicker. Or sometimes you might even get seller financing.
Where the seller acts like the bank.
Basically, yeah, fewer hoops sometimes, but you need to know what you're doing. But before any of that, Linton stresses tip number 3, budgeting for success. This is huge.
And it's more than just listing costs, I assume.
Oh, way more. He sees it as the project's financial map. You start by researching, what's this property likely worth after you fix it up? Then you detail every single expected renovation cost. And crucially, he says, overestimate.
Overestimate. Why?
Because things always come up, especially with older Chicago buildings. You open a wall, you find bad plumbing, unexpected structural issues. It happens.
Okay, that makes sense. So you build in a buffer.
Absolutely. A contingency fund. He recommends aiming for like 10 to 20% of your renovation budget set aside just for those surprises. Without it, one bad discovery can sink the whole deal.
Wow, 10 to 20%. That's significant.
It is, but it's realistic. You also need to calculate your potential ROI, carefully make sure the numbers actually work, and importantly, have cash reserves for holding costs.
Holding costs like taxes, insurance.
Exactly. Utilities, too. If the house sits on the market longer than you hoped, you still have to pay those bills. Running out of cash while you're holding the property is a common way flips go bad.